Hello, and welcome to this session for single family offices. I'm here with Catherine Shiang and I'm Alpesh Doshi. I run a company called Fintricity and we work in the data and AI space. And today we're going to talk about technology in the respect of family offices. So hello, Catherine. Perhaps you can introduce yourself.
Um, you know my name now, so I represent a single family office that allocates capital about 500 million a year US dollars across our different asset allocation. And I'm very appreciative of being invited to be interviewed on this topic of using technology in asset management, specifically for family offices.
Great, fantastic. So let's go straight into it. One of the key questions that would be great to understand is what are single family offices doing in 2020 around portfolio management using technology in the area of data and AI to support their investment and due diligence?
That's a really good question, Alpesh. Using technology in asset management for back office and middle office isn't novel. What's novel today is how to integrate, because not everybody is in an office to have access. So a lot of these tools have now got to be in a secure, encrypted environment outside and will be accessible from people working at home. Also, team integration and teamwork products are now coming to the fore, like Slack. Even the recent IPO of Asana. So those combined and integrated with tech tools for portfolio management is now more and more necessary, not necessarily feasible, because a lot of family offices don't have a strong, especially the smaller offices, a strong IT asset collection.
And what do you see, if you were thinking about doing a process, leveraging more technology with data, how are you creating the processes around the data itself to do the portfolio assessment? So, where are you getting the data from? What kind of data are you getting? And how are you feeding into that investment process?
Well, there's the two school of thoughts, right? And it has always been, which is, do you invest and outsource or invest and build your own? So build versus buy has always been the perennial. And for the smaller offices, I really recommend just licensing the product, and the data would be your own. You can't get anybody else's data, especially since your own proprietary data is your portfolio, and most people are under NDAs, and also most people don't want to share data. And also, it's not a one size fits all in terms of data. Your family's office's data versus, or even an institutional data. So what you're looking for is management of that, your own data. So somebody has to invest in a SAP type of transfer, or back in the day, PeopleSoft, migration of data, setting the data up to warehouse. But that, we're jumping the gun a little bit, because before we go into data, I want to refocus back to just basic tech that people are using for middle office, from cash position management, performance metrics, or even storage of itself in the cloud. And that is something that there are an array of products that can help. And that helps families from increasing their headcount and increasing support of this type. So I would recommend licensing these products. There are a plethora of products out there that can meet everybody's needs, unless you're running quite a substantial portfolio. Ours is completely proprietary. We have built our own, we have invested in it just because of the amount of capital we deploy. And I would say most banks, insurance companies have, not so much as all insurance companies, have managed to invest in their own proprietary middle office tech. It's the integration of workflow process that is an issue these days. And that's never been as neat as one would like. Neat in terms of easily a workflow that goes from your desktop at home, accessing using the company's data, and collaborating across all the different time zones and across all the teams, and accessing that type of intelligence. So that is where the missing gap is right now, is the integration of workflow products and into into the middle office products, services that we've traditionally used from outsourced companies. We have integrated inside ourselves in our own company, but for people just starting into this process, it's better to test a variety of these products and integrate them with your workflow.
And then what kind of technologies are you using? You know, are you using AI and artificial intelligence to do that? And if so, what kind of models are you using?
When we move to predictive, which is where AI really comes into play, because you don't need AI. Before we go further, let me define AI for a lot of people who are way already very sophisticated in AI, but so that we're all talking about the same thing. AI, artificial intelligence, is a big word that includes a variety of products from essentially data scientists, data management, deep learning. So it's when we think of AI, we think a bot or that's self-propagating and creating new information on its own. AI also encompasses fundamental vector sets, deep data set up as a vector, and vector not in the geometry definition, but vector in the computer science, which is sets of data that somebody has to put in an organized manner so that it can be used in a neural network or in a software product. In other words, somebody has to create that data. And that essentially is the AI I'm talking about versus the more exotic neural networks going forward, which allows people to use it as a predictive software, predictive in terms of the market flow, predictive in terms of market trends. That is the holy grail, but we're not there yet. But to answer more directly your question on predictive analysis software, we have to first of all agree on what language to use. I was talking to a computer scientist last night, and he's pushing C, but C is a very root language versus R or Python. I mean, there's like 12 different types of computer languages, but no one size fits all. They're very limiting. And each limits itself to a certain type of use. So you looked at Adorix, I believe that's how you pronounce it.
Alteryx.
Adorix, and it focused primarily on real estate platforms, real estate investment. It is geared up for the domain settings, the domain neurology for real estate. It takes on the risk of real estate issues, but you can't migrate that to another sector. So the AI holy grail of wanting to use predictive software was looking at your data collection of your asset, all your assets, and saying, okay, where are my risks? Where should I weigh more heavily? Where should I allocate more risk to? Is something that is a holy grail still. And I would not say that there is a product right now that is sufficient that I would feel comfortable putting our entire portfolio platform into that. I think segments of that can be used just as we are using that today. And that has really helped in terms of COVID 2020 as far as our asset management and our inability to actually go feel touch in the due diligence process, but has allowed us to be a lot more introspective in our existing portfolio and allowed us to do a little bit more deep dive.
And so, when you're using this technology as part of your portfolio decision making and portfolio allocation and portfolio construction, can you give us an example of a sector or a market you've invested in where you've used data to actually make the assessment either of the market or of the company, and obviously the company and how that fitted into the market and why you would invest or buy that particular company?
That's not quite how we have conducted our due diligence process. What we have used big data and data for is more macroeconomics, where the trending is, where the sector is within our own portfolio construction. So we say, we've got, A, B, C assets, and we will put all the data in the past 15 years through several market cycles. And then we throw that into our if you will, AI, our neurology that we've created. It's proprietary. And again, I encourage people not to buy one size fits all. As I was saying about Aderix real quick, their stock has plummeted. And that's because it's not living up to, it has to be tailored. They can't sell a real estate portfolio platform that fits everybody's needs. And so going back to this, what we do is put ABC into using our own data through several market cycles, and then look at saying, weighted average, where should we invest more, and not individual companies. I think using AI for individual companies is a little bit, I think, futuristic. And the reason why you have to then code into the managers, because you're investing in people at the end of the day. You're investing in the talent of that company more than anything than what they're, you know, they're promising, because you're relying on that talent to deliver that promise, that you know, whether it's a 2x, 3x revenue, whatever they're promising. So that is why we haven't been using any of our tech products to assess a company. What we have done is use tech products to enable our analysts to run numbers and to do traditional metrics of that company. And you're asking for something very interesting, is that there's all these predictive AI software on whether some people are you know, and I don't want to be PC, but there are software that determine sexuality of individuals, preferences of individuals based on their face. And China's a big AI on facial recognition software for a variety of reasons. And we would have to add that into the interplay if we were going to use that to analyze whether a specific company is that is shortlisted by our IC is a company that we want to invest in. I think that you're going into a slippery slope that we're certainly we're not there yet from our perspective, and I think that that goes into a lot of you know, minority report type of issues and privacy issues.
So are you looking at macro trends? So if you take real estate as the example, are you looking at macro trends globally? Are you looking geographically? Are you looking at, you know, the use of real estate? So we take real estate as the example. Are you looking at what uses, given COVID and given the change in how people are going to be working in the next few years? You know, are you taking those kind of parameters into account in doing an assessment on a valuation, for example, or a geography or a type of property?
Real estate is has a longer impact, and COVID actually hasn't affected a lot of our real estate holdings. So it's not an asset that you buy, you know, for 1 month, hold it for 6 months, and then flip it and sell it. So there's a lot more. There's more drag in this asset class. COVID has impacted us in looking for other alternative assets. We've been heavily invested in tech, and so I've been spending much more time in the US, in the Bay Area specifically. And COVID actually has enabled us to get a lot more appreciation for the tech tools, products, and services. So now you get to use these things versus in the days before you would look at, let's just use Slack, for example, look at Slack and say, oh yeah, that's great, but you're never really on Slack. Now, because of COVID and because of shelter in place, you're much more on using these tech, and you can be your own validation of that. And we have been using tech products and leading into more investments in tech. And that's a nice segue to investing in AI and tech products to enable construction portfolio management. And there are a lot of softwares out there that we can invest in, especially for the key problem, data. Whose data? How clean is the data? Migrating data, warehousing data, storing data, accessing data. And that really is something that I know that you have a lot of experience in yourself.
Absolutely. And that's what we see in the market. You know, one of the biggest challenges around using to get data right across any business is the actual, to build a complex infrastructure like that is quite costly. And most companies can't afford to buy it. They don't have the skills or the budget or the time to do it. And that's one of the trends we're seeing in the market. AI and adoption of AI and data across most companies will require this kind of infrastructure, provided in the cloud, so you don't have to build it all. And that's one of the gaps that we're seeing. So, if we generalize the conversation about, you mentioned that you do tech investments, and that's a trend I'm seeing in family offices and single family offices and multifamily offices, that tech is a sector that's interesting. With your expertise and your experience of investing in tech, what do you see as the trends? What do you see in terms of where family offices should invest in tech, and how should they find those deals that they can invest in?
Well, first of all, I think that family offices, unless they have a strong domain expert in tech, should look at investing in later stage tech. It is a higher valuation, it is more costly, but on the other hand, trying to get into the seed round or early stage round, you really have to add value. And you and I had several conversations about whether your term sheet will be accepted by a founder like yourself, a tech CEO like yourself, because you want people to bring value to your organization.
Yes.
Money just is money. And there's a lot of money, actually, if you've got a good product. So what I would recommend for single family offices or even multi, but new to this, is that unless you have domain expertise and can convince a startup to say, I'm going to bring real value to your company, and have the manpower, the resource, human capital to help manage and grow that company, better off to go into the C and D round. Now that we've talked about which round to enter into, or even wait until do a pipes, or wait into the public market, and or go into some of the ETFs. To invest, I personally invest in early stage and seed. Personally, the family invests in A round and B round. And probably the last round we actually invested in was E, just because as we're writing bigger tickets, we have less resources. And again, here is where technology can help continue to help manage the tech assets or any investment assets as we grow. Remember, if you allocate to 10 companies one year and then next year another 10, it balloons up pretty. One person can't manage 100. Even Goldman Sachs analysts that's working night and day, being paid a fortune, can only manage around 85 to 100 and they're sleep deprived. So family offices, unless you're going to commit to investing in talent, you're going to have to use tech to help manage that. One, and two, write larger checks. And if you're going to write smaller checks, then you're investing people, talent.
And do you have a view on how to get deal flow? Because one of the challenges that I've seen is families wanting to invest in tech, well, in anything actually. The other industries like real estate, for example, are more developed. Their networks are more developed, for example, in some family offices. But what I've seen is tech deal flow is harder to find. I mean, do you have tips on where to find deal flow?
I don't have tips. I have what we have been doing, and one is besides attending all these angel and conferences, is really to get to know several good founders that have and they tend to be serial entrepreneurs. I mean, look at all the big guys. They've continually invested and supported startups and grown them successfully. I think that getting to know one or two very strong CEOs, they in turn will introduce you to others. And if you play into that space, which is bring value, opposed to just say, take my money and then you can use my name, like I'm a rock star and I invested in and for glamour, you can use my name on the cap table, because cap table construction is critical to tech companies. Most of us are trying to say, hey, we'll bring value in this way or that way, and consequently, that I would once or you are in, if you will, you're allowed into that inner circle and more deal flow, of quality deal flow. I'm seeing a lot of deal flow, and most of us are seeing deal flow. It's quality deal flow, and it's also trusted managers like yourself and other very strong, reputed managers that you believe in, because credibility is an issue, whether or not somebody can deliver something. There's a lot of deals globally. It's cleaning, it's time consuming to clean those deals and to manage that deal flow. And it's exhausting for the team. And here is again where technology might, if you trust it, go in your inbox and say, okay, of these 1,000 submissions, these 10 are worthwhile looking at. And that we're not there yet. That would be a great tool.
So we have time for one more question. And what I'd always like to do is look forward to crystal ball in 2021. You know, what would you say for you, if there was something to say to any family office, what they should look at for 2021 around tech? What would you recommend? You know, what do you have a direction that you're going in? Do you have a view of sector in tech that you would say, here's a sector to look at? Obviously not giving investment advice to anyone. This is just an opinion. So just put that in just to make sure.
I don't think that COVID is gone. What COVID has shown is that we actually don't need Class A buildings for all our workers. And our family has not, you don't need, people can work at home virtually, in other words. And our family has come out back in about 10 years ago, and I said this in the several earlier conferences, and we've always invested in our talent working at home. We have these, if you will, a temporary office space like a Regis. It's not Regis, but we have these globally for people, employees to go and have meetings so that they don't have to host people at their home. We pay, and this goes to an earlier talk I had given, which is how do you compensate your workers? So what we've done instead of, because we can't compete with BlackRock and Goldman and their compensation, we pay for their mortgage, we pay for, and as they move into more senior roles, the mortgage allowance gets higher. We pay for that. We allow co-investing. We give interest-free loans to our workers. We pay for all of the utilities that, so their home office has already been built in. So going forward, I see more and more families and more companies investing in their workers working from home. And those software, connectivity software, which I began our interview talking about, will be more and more interesting. You look at how Zoom has taken off. There will be more and more competitors, just like there are more and more, before Google was even Google, there were 5 or different, remember Alta Bates? There are so many different other search engines. And I think that Zoom will get a lot of competition going forward. I think investing in data storage will always be essential. Energy, because these servers run on energy. I think warehousing, how do you warehouse, colo? At the end of the day, there's a tangible piece of metal that is housing that data. Where is that? Cloud is where you access it, and it's just not on your metal and on your racks. But so those are products I think will be more and more interesting. And to your favorite topic, which is AI, I think more and more data warehousing, data cleaning, data prep, data analysis, transitional type of middleware, if you will, technology would be extremely interesting to connect remote workers to their home office. I mean, their team.
We've run out of time. Really, thank you for your time and your insight, and you know, the somebody who knows about technology in family offices, which is always good to hear and good to see. Thank you everybody for listening, and you can find us, I'm sure, on social media. Catherine, you can reach her on, I think, on the chat on the app, and you can reach me on the app. You can find me on LinkedIn. And Catherine, where can they find you, just so that people can know where you are?
I'm on LinkedIn, and I think that thanks to our organizers, and they've put together an app that people can connect. And now during this environment, it's really lovely to already get people that want to that have sent emails to me or chats to me. So I'm happy to continue to connect with everybody there. And I really appreciate your interview, Alpesh. Thank you.
Thank you very much. And bye-bye. Say bye. Bye.
Bye.